Hey guys, Doug the retirement guy here. Should I have RDT in my retirement fund for more income? Well, this is the Roundhouse Investments. RDT, their yield they're advertising is 34.52%. If that's real, we probably got one we want to add to our retirement fund. Let's take a look deeper into it. RDT Small Cap Zero DTE Covered Call Strategy ETF. If you don't know, these are becoming more and more popular. Zero covered call strategy utilizes 0-day expired basically options on small cap index. They're using it in a lot of different areas. The idea of it is to generate cash and generate income doing quick turns or quick flips, I call it, on option calling. So RDT definitely has a great strong strategy. And one of the things they do is a weekly income payout. As they advertise distribution, 34.52%. But a little kicker here is the 30-day SEC yield is 0.52, which we'll get to here shortly, but that's not a real good number to be looking at. Let's take a look at their holdings. And you see at the bottom, they have first government obligation funds. This is where they're generating cash, basically from $15 million sitting in the account, collecting, we'll call it interest, we'll call it dividend from FGX, which is the first American government. But then they also have about $106 million or $160 million going after the RUT funds, and this is where they're doing that synthetic options calling. So why RDT? Why would we be interested in this? Well, of course, it's because they're advertising the 34.52% return, which is what we all want to get. But also they have a negative that 0.52 30-day yield. Looking at the 34% return, this is the total return over a specific period, which means it includes both the income, your dividends, your interest, capital gains across the board to give them that 34% return. This is usually a high number, which means and always suggests that there's a lot of risk involved in this. So that four-letter word risk is something that we probably don't want in our retirement fund. But again, a little gamble can never hurt somebody, but we got to look detailed. Is this going to work? Normally, when you see such high numbers of 34% like that, it's underlining strategies like options trading, and there's a potential for basic up, down on your NAV. That's really moving the value of your stocks in a good way or a bad way, and you got to be careful with that. The negative 0.52 30-day yield, this is the warning sign that got me when I started looking at this and saying, time out, let's look deeper, but let's be skeptical of what we're getting into. A negative SEC 30-day yield means that there's potential of a no payouts or extremely low payouts. This means over the next 30 days, they don't expect this fund to be generating much cash. So right off the bat, I'm really always concerned about that. But we're asking, why do we want this? Well, a big one is the weekly dividend payouts. Now, there is no guarantee of every week getting paid, but they've been pretty steady across the board. As you know, on this channel, I love weekly dividend payouts because you have faster access to your earnings. You can reinvest that potential to get bigger and better as you grow. What we call the drip is continuously add and buy more shares week in, week out, so slowly keep increasing your income. For retirement people like myself, regular cash flow is like getting a check every Friday. For the income focused, weekly payouts ensure that stream of income. Now the question is this fund going to pay it or not? Let's take a look at the return of RDT over basically the inception, which was only of September 10th of 2024. So this is a fairly new fund. In the past 1 month, they're down 0.51%. Over 6 months, they're down 0.2.8. So a little over almost 3% down. Year to date, it's back down to 0.51 negative. And again, over 1 year, because it's such a small window we're dealing with, it's a negative 2.8. And again, from inception, it's negative 2.8. So the returns are not there. It's not real strong. So let's take a look at the return on the investment of RDTE. And if we put $10,000 into it when it first started, we would have bought it at $42 a share. $10,000 invested would have gave us 238 shares. And then we had a dividend of 36 cents that first week, which was pretty impressive. And as you look down the chart, we went all the way through, and I'll give you something right around December 18th. There was a $3.10 drop. and it killed this fund. And then when you drop that, it's never really recovered. If you look at the dividend income side, it's pretty basic level, as low as 20 cents all the way up to 87 cents. So it's got a fairly smooth, comfortable 20 to 25 cent average that you can count on and get bonuses, every so often with a little bit higher. But when we take a look at the whole time, all the way up to January 29th, we lost $221 in the value of the account. We've gained $1,573 worth of income dividends, a 15% return over 4.75 months, for a grand total of $1,352 or 13.52% total return with adding in our dividends back into it. So again, decent numbers, but again, will that be good for a retirement fund? Now, this is the other thing I've been starting to add now, is really looking at things is the price adjustments over time. RDT has what we call an M effect, is that you have the first leg of M, great upgrade, then you have a downward trend, then back up, and then back down again. And when you have that, is you really got to be careful, because the old saying is buy on the low and sell on the high. You got to really watch this one, because the M effect is probably the most dangerous one. Is how often is it going up? How often is it coming down? When's it going to go back up accordingly? The average price is $43.38. Now I did something different here and added in that past monthly average, because you see what happened is you had two M's back to back, and then you drop almost all the way back down to where the fund started. That's that big drop in December 18th I told you about, that $3 drop. And it hasn't recovered since then. So our real question is, what's going to happen in this final drop? Is it going back to M, or is it just flatlining? Where are we heading to? So like I said, the chart shows it's not holding the price value over long periods of time. When you look at this, you're going from September to December, 3 months max, and it dropped out. So is it going to climb back up? Is it flatlining? And it shows right now in the first couple months that it's just going to flatline. And I would expect this to do it for at least 3 months straight through. So my summary on RDT, the stock return, like I said, is negative 2.21%. It thumbs down on that. The dividend return over the first 4 months, 4.75 months, 15.74%, or 43% over 12 months. Well, this is another way of looking at it too, is regular cash flow. You're getting 0.82% per week, or $82.80 a week on $10,000. That's about 3% a month, or $331 a month income from $10,000. So on that side of it, I'll tell you what, you got to give it a thumbs up. It definitely has that cash flow return that a lot of people look for. And then the total stock return, again, 13.52%, including dividends, or if you do it over a 12-month period, is 37.01%. Again, with those kind of numbers, you have to give it a thumbs up. But you also have to mark yourself as a huge risk with you're using dividends to cover your losses. So basically, if you don't get the big dividend return, your returns are going to change and suffer big time, because you're paying for the stock return. So is RDT good for a retirement account? My answer is really going to tell you is no. And I'll get clarity onto this one. Is the NAV loss is way too high. You're losing more of your value, and you have to take some of your dividends to pay for that value. So your dividends is great at 43%, but again, what's the loss that you have to pay out of your dividends back in the system? So for a retiree, you don't have that positive cash flow that you like, that you can spend every dollar coming in. You have to save some of it because of the value. As long, and in the time of this too, people will say, well, I invest and I don't care about the NAV when I'm living off of dividends. Well, you got to hope that the fund never drops out or fails you. So again, for retirement accounts, I'm totally against this one of having your money setting into it. If we look at into the future, the performance of this thing, and this is a new way of looking at things. So let's take a look in the short term of this. If you went back to December 18th, bought it after that $3 drop, and invested your money, what would you look like? Again, $10,000 into it, buy you a little more, a couple more shares, but 240 shares. But if we run this all the way to the most recent information, so January 29th of 2025, you would still have lost 1.28% of your value, about $127 loss. You would have gained $518 from income from the dividend side of it. And again, I'm going to give this one a positive. It's maintaining that 25 cent, 27 cent average dividend payout. So again, very strong cash influx. And you're sitting here with 5.919%. And this is really over about 2 months. But when you take and pay back your value, you're down to $391 of what I would call net profit, or 3.91%. Great numbers, but again, get this. Short-term loss of your value, it shows it from when the fund first started, and it shows you even in a short period that you're losing value in your fund. You got good income at 5.19%. You got a total gain with including your dividends down to 3.91%. So again, going into this and saying, am I going to use this for income for my retirement fund? I got to give you a thumbs down. We'd rather take some shorter interest payments or dividend payments that's not going to lose money in our value of our fund. If you like the information we're giving you guys, give us a thumbs up on the site. If you don't want to miss any of these, hit the subscribe button. Leave your comments, what you think about this. I'd love to hear people's opinions onto it. This is Doug the Retirement Guy, and this is a fun. We're going to say stay out of it for now. Have a great week, guys.